Good morning. Welcome to Flyers Real Estate Direct Lending and Private Debt Forum Part 5. This is our 5th event in the series. Our event today is a 2-day event. We'd like to thank our sponsors, Nationwide, Allagash Partners, Preqin, Boomerang Capital, S&P Global Market Intelligence, Safe Harbor Equity, the Mortgage Office, Harvest Volatility Management, Millennium Trust, Apex One Investment Partners, Intrust Global, Off the Chain Capital, and Clarion Asset Management for making this event possible today. Also, thank you to all our Flyer members and Flyers board for their support during these challenging times. For those of you who are not familiar with Flyer, Flyer is a 501c6 nonprofit organization started in 2007 with the goal to become the world's leading marketplace for alternative investments and alternative investment education. Since then, Flyer has helped thousands of firms in the capital raising process, aided in the allocation of billions to alternative investments. We've leveraged technology to accelerate the due diligence process. Today, Flyer as an organization has over 1,000 members with over 1 trillion in discretionary AUM. We would like to thank you for attending today. Enjoy the day. Our first presenter this morning is Mr. Alberto Bernal, Chief EM and Global Strategist of XP Investment. Alberto?
Good morning, everyone. Thank you, Michael. Thank you to Flyer. Thank you, Rainford. Thank you, Jeff, for the invitation. It's a pleasure to be with you guys. I don't have much time, so I'm going to go directly to the point of trying to make sense of what we have nowadays because of the pandemic and the expectations for growth and for the economy in general and for markets in general and whatever may happen in whatever is to happen in our region because of these challenging times. So the way that I do my research is I try to be very forthcoming with clients and the people that listen to me in terms of how I see things and how my mind works, because again, nobody can see the future, so it's very illogical to be just just come up and say, okay, this is exactly what's going to happen, this is what's not going to happen, etc., because it's very uncertain. It's very difficult to make those cases in a situation like the one that we're seeing today, which is completely unprecedented. And I know we economists, we analysts keep on saying that, but this is really completely unprecedented. I don't think that none of the people that are in this call will ever experience a situation under which the world, pretty much the whole world, takes a decision to shut down, to contain a pathogen like COVID-19. To me, it's been sincerely incredible to see this process, because again, the costs attached to the worldwide lockdown that has been implemented are simply skyrocket. It's incredible that we're here, and that's the reality. So, but it is what it is. There's nothing we can do. This is the cards we were dealt with at this point in time. So we need to try to make sense and try to say something relevant going forward to try to explain what may or may not happen going into the future. So the first thing that I would say is that it's very hard to amalgamate two very specific issues. For example, for a lay person, you look at the current situation, you see the news, you see the headlines on CNN, you see the headlines on other networks, you see the speeches from policymakers and pundits, and it's impossible not to be extremely depressed. I mean, if you're stuck in your house watching TV the whole day, you're completely depressed. And this is the end of the world. That's the reality. There's no future. We're all gonna die. The economy is doomed, et cetera, et cetera. Then again, you put off the TV, or you change channels to CNBC, and then you look to your right hand side to the bottom of the TV, and you see green numbers and green numbers and green numbers and green numbers. And it's like, what the hell is going on here? I mean, how is it possible that CNN is telling me that the world is over, that the next thing, that the only thing that we're missing in this world is that an asteroid comes and destroys all humankind. And then we have the NASDAQ up 11% on the year. What's going on? Makes no sense. And it really doesn't make any sense for somebody who's just focusing on the very specifics of the news flow, because again, it shouldn't make any sense that you have such good performance of markets with the terrible fundamental economic situation that many people are living right now. But here's the point that I want to make. One is going to have to give. Either the market is right or the market is wrong. It's as simple as that. You cannot have an economy that is completely destroyed and markets performing well. It's just not logical. It doesn't work like that. It cannot happen. So my job as an analyst is to try to come up with an explanation of why we're here. And this is the best I have for you. I have three pillars. I have a structure of the world economy that rests on three very specific pillars. The one that I call liquidity, the one that I call fiscal stimulus, and the one that I call human nature. On the liquidity front, it's pretty simple. And I go back to late March when CNBC interviewed Larry Kudlow, and Larry Kudlow said something magical on TV. He said something to the tune of this: when he got a question from a panelist saying, one of the TV panelists saying, "But Larry, explain this to me. Are you saying that the government is going to save everyone at whatever cost?" To which Larry Kudlow, which is, I know him well because he was the chief economist at Bear Stearns, and I used to work at Bear Stearns. Larry Kudlow is a libertarian. And Larry Kudlow said the following. I said, well, here's the thing, Joe. A virus is not fair game. And I think that's magical. That is probably the most logical thing I have heard in a very long time. A virus is not fair game. So if you're a policymaker and you want to castigate United Airlines because United Airlines wasn't smart enough as to forecast that the COVID-19 pandemic was going to erupt in February and March, and therefore it needs to go broke, then you're a very selfish politician and a very illogical person, because nobody can see the future. So you cannot castigate companies for not being ready for something like a pandemic. So the decision to have huge levels of liquidity has made a huge difference. And by increasing the balance sheet of the Fed from $4 trillion to $7 trillion, that has generated a very V-shaped recovery on the S&P 500, which is very positive. Fiscal stimulus, this is also very important. And I think that this time around, the fiscal stimulus has been done well. And here's the bottom line of what's happening. This graph that you're seeing right now is the savings rate of a typical US family. It went from about 8.5% in March before all the situations started to go haywire. It went up to something like 33% in April, and it's down to 25% more or less in May. What is it that this means? What is it that this graph is showing us? The graph is showing us that a typical US family, despite the fact that a lot of people lost their jobs because of the fiscal stimulus and the support that the government has given to companies to keep people employed, a lot of people who are still at home, relatively confined, have good enough amount of resources on their bank accounts to purchase stuff. And here's the thing, either the typical US consumer becomes Asian in nature because Asian consumers tend to save a lot, or the US consumer becomes a US consumer once again, once this whole pathogen starts to become a little bit less relevant. And Alberto Bernal has already made up his mind. I think that the US consumer will never, never be like a Japanese consumer. The US consumer is not going to save 30% of his income because the US consumer enjoys the art of consuming. So this is going to go back to 10%. So if I'm right, there's a lot of dry powder in the wallets of US families to utilize, to go back to shopping whenever circumstances allow for us to have more shopping. And that is the reason why retail sales have rebounded so much, why Amazon is doing so good, et cetera, because the level of there is enough amount of dry powder inside the family's net worth to go back and do stuff. So that's to me a very important issue. And perhaps the most important, the really relevant issue is the following: human nature. And here's the thing. Let me make an analogy, and it's a little bit of a cynical analogy, but I think is the really accurate one to do. When a family, when there's a death in the family, of course things are very, very hard for that family in the moment in which the tragedy happens. So the first day after the passing of the family member is horrible. The second day is even worse. The fifth day is very painful. A month after, you start remembering the good things about the person that passed. 6 months after, you're pretty much back to full normality. And 1 year after, despite the fact that this is a huge tragedy, you're back to normal and you're living your life, because that's how humans are. And this is why I include these two things, these two little tables here. And the first one is on Carnival Cruise. When I read this news, I couldn't believe it. It says, Carnival Cruise Lines booking soared 600% for August trips. And it's like, what? No, this must be a typo. And I kept on reading the news. Here's the bottom line. Carnival is not going to restart cruises on August, but everybody that wants to go into the August cruise will go into the September cruise. If there's no cruises in September, then they will go into October, and everything is completely full. How do I know this? Because I have a very good friend in the cruise industry that keeps on telling me that he cannot believe that despite everything that is happening, people want to go back into boats and have a good time. That's the reality. Why? Because humans are humans, and they wanna go back to having some sort of life and not be confined to their homes and watching Netflix the whole day. So this is the reality. For some reason, the market is pricing in this thing that the news channels refuse to talk about. I haven't seen this piece of news anywhere in the news channels. I don't know why, but that's a different conversation. But the bottom line is that the market is probably pricing these things. And I'll end with this because we don't have too much time. Here's the bottom line. A pandemic is part of life. This is not the first pandemic that we have seen. This is not going to be the last pandemic that we have seen pandemics in 1520, 1620, 1720, 1820, 1920, and 2020. This pandemic will go away. Why? Because it always does. The question is, how long does it take? And there's two ways that the world has addressed this thing. The Swedish way, which is on your top left-hand right, on top left, it took about 110 days for the peak of the cases in terms of diseases to go up, and then starts to trend down. Why? Because the vulnerable population unfortunately got the virus and it succumbed to the virus. That's a reality. COVID is a very bad bug, but mostly for a very specific portion of the population. The UK tried the libertarian way, then it went the other way. It doesn't matter. It went into full lockdown. It really didn't make any difference. It goes up again. you have the typical normal distribution. The UK is almost back to normality right now. Brazil, it's probably at the peak. Colombia, it's probably at the peak. What's the difference in between the European way and the Latin American way? That the Europeans, in the case of Sweden, never closed. And in the case of the UK, they closed right at the beginning. In Brazil, Colombia, Mexico, Chile, Peru, etc., we closed very early. So we flattened the curve extremely, which means that it's going to take longer for our countries to go over this pandemic. But again, the pandemic will go away. So what is the bottom line here? Bottom line here is life goes on. Opportunities are going to be huge. The liquidity levels in this world are immense. For those that have the capacity to not panic and start going crazy in their houses by thinking that this is the end of the world because news channels are in the business of creating panic, this is going to generate some very attractive opportunities for those that are able to try to look at the forest and not just look at the burning tree. Thank you for the attention, and I think I left some time for a couple of questions. Hello?
Yes, Alberto. There's some questions that are coming in about trade. Like, what is your favorite trade to express these macro views?
That's a great question, Michael. And so my view is necessarily consistent with what I call dollar weakness view. What does that mean? This means the following, and let me try to explain a little bit more the way that I get to this conclusion. If the Fed is printing money like crazy because the Fed believes, and the Fed and the US authorities in general believe that a virus is not for a game, and therefore you should not destroy companies that were not forthcoming enough to forecast that a pandemic was going to come, then all that money that has been created, which I estimate to be around $7 trillion, $7 trillion, that is pretty much, that's about the size of 3.5%, three times Brazil's GDP, more or less. If you have created that in a month, which is basically what happens, all that money is going to be looking for opportunities to invest all around the world. And since that money is mostly dollar denominated, then the dollar should get weaker incrementally, because as risk aversion falls, then people start moving away from dollars and looking for more yieldy opportunities. Why? Because if you buy, let's say, a 2-year bond in the US right now, you basically don't get any yield. But if you buy a 2-year bond in Mexico or in Colombia, you get at least a little bit of yield. Or let's put it this way. If you take that money, instead of putting it in a bond in the US, and you buy Brazilian stocks, or you buy Colombian stocks, or you buy Chilean stocks with good dividend and the expectation that the world will eventually find a vaccine, which means that currencies in EM are going to get stronger. So if you invest in a 2-year bond, you make 0.4% in 2 years' time for your client. And if you're brave enough to go and invest into less quality or lower quality assets, let's say Colombia stocks or Brazil stocks or Chile stocks, and you have dollar weakness plus some mean reversion on the equity markets that fell like crazy during the pandemic, then instead of making 0.4%, you make 30% on the other side. And my sense is that slowly but surely, investors have come to the view that this is not the end of the world. And you should utilize the opportunities that are given to you to generate some alpha for your clients. So, and I think that's exactly what's happening. And that's why we have seen some relatively aggressive mean reversion on currencies. You know, the Colombian peso going from 4,200 or 4,300, or I don't remember how far it went, to 3,600 today. That's a huge move. The same with the Chilean peso, etc. Despite the fact that those economies are in a very tough situation, the markets are anticipating that things are not going to be that bad going forward.
So Alberto, we have a couple of questions here. I'm going to link a couple of them together. One gentleman, Evan, says, do you think the market will increase? Thank you. And then another gentleman is saying, what do you believe will happen if there's no vaccine? Will it make any difference to the economy?
Well, I think there's a very large probability that we will get a vaccine. The question that I have is how long how much time the vaccine works inside a typical body. That to me is something that continues to be a question. I think that the risk of no vaccine, as in no vaccine, is really minimal right now, based on everything that we're seeing in terms of the news coming out, and the fact that the second trials of the Oxford vaccine have apparently gone well, and Moderna and all those things. I would be very surprised if we have those bullish announcements from these companies and they come to nothing. The key question is, again, how effective it is and for how long, and how fast you can do this thing. Now, but outside of the vaccine, let's do a hypothetical. There's two ways of looking at the no vaccine situation. The no vaccine situation implies either one of two things. If you ask a half empty glass of water type of person, and which is a half empty, no vaccine means the end of the world. So if there's no vaccine and your only solution is to stay at home, not live, and just panic by watching, how numbers go up, et cetera, then the game is over. And there's really not much you can do. Might as well just, stop living. Because to me, staying at home for 2 years or 3 years until the virus just disappears for natural causes, it's not a solution, because that generates even more death than COVID. But again, some people are like that, and I respect that. It's just the way that people see their lives. So that is the extreme confinement view, which is tied to some healthcare professionals who don't fully understand that if you close the economy for 2 years, you will have a very bad situation socially, and you basically destroy the livelihoods of kids. That's one option. The other option is, if there's no vaccine, well, you go out and you battle the virus. And some people will die and some people will survive. And that's the simple situation. And that is the kind of attitude that existed in humanity during 1520, 1620, 1720, 1820, 1920. And Michael, I refuse to believe that people in 2020 are just going to give up and not live anymore because there's a pathogen that, if you measure it right, according to the CDC, not me, not Alberto Bernal, CDC, the lethality rate of COVID-19, if you measure it right, which includes the asymptomatic cases, which means that in the US, you have already had about 28 million cases of COVID. If you measure it right, what you do is you divide 135,000 disease casualties over 30 million people. And then you will get the actual number on how bad this bug is. And if you do the even more accurate view, and again, these are not my numbers, these are the CDC, Center for Disease Control numbers. If you do the numbers right, you will get to the conclusion that this bug for kids, I have an 11-year-old and a 14-year-old, this bug for kids is less aggressive, is less lethal than influenza. Not my words, the words from the Center for Disease Control of the United States. So one can believe the CDC or not believe the CDC. But these are the numbers. I only talk about numbers, Michael. I don't talk about anything having to do with ideology or anything. To me, that's an irrelevant discussion because we will never get to an agreement. But numbers will or should allow you to get to agreement. So if there's no vaccine, my sense is that eventually people will understand that we need to go back to some sort of normality. And to me, that is exactly what the market is pricing in right now. Because otherwise we will be having the S&P at 1,000 or 800 or something, because if the world that the main news channels are showing is the world that is the reality, then the market is completely disentangled with reality. But I don't think the market is disentangled with reality. I think that there's just an intention to generate an extreme amount of panic for reasons that I don't understand, but it is what it is.
All right. Alberto, there's a lot of questions here. I put up the slides so that people could reach out to you. If, with your permission, I would like to share the slides that you had today.
Of course.
And, you know, hopefully I'll send over the questions and perhaps you can answer some of those questions that people have for you. I'm sorry, but I thank you very much for joining us today and being part of our association in this particular conversation during such a difficult time and such an, you know, important time historically. I believe that people are going to be looking back over the next 100 years and talking about what happened today. And, you know, we're grateful to have people like yourself sharing insights on a global as well as regional level. Thank you very much for joining us, and to XP Securities for being involved. We appreciate you.
Thank you very much to everyone for calling in. Thank you, Michael. Thank you, Jeff. Thank you, Flya, for inviting me. It's a pleasure and an honor. Thank you very much.
All right. Thank you.